XRP just crossed $2, but the real story isn't what's happening in public, it's what's happening in the shadows. To understand where this is heading, you need the full picture. XRP's journey began as a tool for banks. Ripple offered a faster, cheaper protocol, and the banks liked it. That early traction sent the price moving. Then came 2017. XRP surged to over $3 on pure momentum, some utility, but mostly retail excitement. That's when institutions got uncomfortable. XRP was a threat to their profits, so they resisted. In 2020, the SEC lawsuit hit, and it froze the US market in its tracks. But here's what most people missed. While the public price was stuck, Ripple kept building. The tech improved, the partnerships expanded, regulatory clarity started to return. Now, the demand, it's not showing up on charts because it's happening off exchange. Institutions are buying XRP through dark pools, private markets that don't move price. Each month, Ripple releases 1 billion XRP. Most of it goes back into escrow. The rest, quietly sold to institutional players. That's why price action has been muted, not because there's no demand, but because it's hidden. And remember this, back in 2018, a report by Robert Michnick, now at BlackRock, projected XRP could hit between $6 and $32, and that was before the lawsuit. Now, over 20 asset managers are filing for XRP-based ETFs. If demand goes public, those quiet accumulation channels could vanish overnight. The big question is, what happens when institutions stop buying in secret and start racing for supply? If you've been holding through the chaos, you're not crazy, you're early, and that's why it still feels uncomfortable. But when this flips, when demand becomes visible, $2 could feel like a bargain in hindsight. So no, you're not late, you're just ahead of the crowd. Want more crypto videos? Check out my playlist. Remember, this post is brought to you by the Crypto Chrome. Like, follow, share, and repost this video if you believe that crypto is the future, and the future is now.